Tesla stock is on a tear right now, rising sharply overnight and crossing the $350 mark today. So far, hedge funds shorting Tesla has lost more than $5 billion in just the last week. Many are saying Tesla is now in the beginning of its phase 4 run-up. Today, we'll watch a video of Cathie Wood of ARK Invest predicting that the longer the base, the bigger the breakout. Second, we'll review Tesla's market cap compared to 16 auto companies. Newsflash, Tesla's not just a car company. Third, Dan Ives of Wedbush Securities just raised his price target to $400, again calling Tesla an AI company. Fourth, we'll watch a video of Jensen Huang of NVIDIA forecasting the rise of AI factories. And finally, we'll review an extensive list of upcoming Tesla stock catalysts and milestones. Jeff Lutz is a multi-decade supply chain executive and chief quality officer. He's now CEO of his own supply chain consulting firm. Thank you, Jeff.
Hey, Herbert. I think there's a saying, the longer the base, the more time in space. And yeah, it's been a fairly long
First
base.
time I heard that one.
Yeah, so we'll spend a little bit of time on it. I think there's a few things to discuss today.
Yeah, absolutely. So there's reasons why the stock is rising. It's interesting that it may not be about earnings per se, but its expectations are all rising fast. So people are still shorting. You've got the hedge funds here shorting Tesla. They've lost $5 billion since the election. You can see that they're clinging onto the bets against Tesla, have lost billions of dollars, and they had their short positions since election day, and Friday's close is $5.2 billion. Of course, today, Monday, it's still rising up quickly. This is a shrinking group. So if you take a look at the positions of more than 500 hedge funds that these guys have been tracking, you'll see here that it's fallen. Here's the black line. Tesla shares out on loan. Used to be very high early 2019, and now it's fallen, and they've lost big as stocks continue to rise. What you're thinking about all this moves by the hedge funds?
Yeah, when I see these charts, I don't think we actually know the extent of the amount of shorting out there. There's so many different investment vehicles to bet against a stock, and it's only grown over the last several years. I know people like to pull up these various things that tally it up. I don't think we know the extent of it, and I think it can be quite large. I know some people just they look at one indicator, they try to simplify it and put it out there, and it has shrunk over the years. But I also think the number of different vehicles and approaches to shorting have increased, and it's gonna be painful. The stock burst through 300 with a fair amount of ease, and in today, it's up even much higher, close to 350. We'll see what happens. I mean, it's hard to predict this thing day to day, but a couple of things are definitely happening. There's definitely momentum, and definitely I view the Q3 earnings as kind of setting the floor. Again, the things that analysts were really been concerned about on the name in terms of gross margins and earnings per share all outperformed. So they had to race to upgrade or to update their projections for the following year. And then Tesla guided during that call, which they don't normally guide for the following year in a Q3 call. And Tesla guided, during that call for, somewhere between 20 to 30% growth in the following year. And analysts had, high single digits, maybe 13% growth, I think, on average. The other thing was cash. And again, in Q3, Tesla's supply chain, that system, they just crushed it from a cash perspective. And, again, they maintained inventory, they maintained channel inventory, balance sheet inventory, and they grew production in the factory. So the analysts had, I think, about $1.3 billion for free cash for Tesla in Q3, and they threw off, I think, 2.7. So all these things add up. And then, of course, the big thing that's happened since we broadcasted last week, Herbert, was the election. And that really, I think, ripped off a huge overhang in terms of Tesla's future, both with, regulatory ease, I would say not ease, but regulatory resistance, maybe some of that getting, unburdened, maybe. And also just having, the leader of your company not be also, he's also unburdened by all this, lawfare and investigations in his proximity to the president. So you had this confluence of things happening. And if you were short and you were betting against that, and by the way, like, all the pollsters, everything was pretty close leading up into election night. There was a reason for people that do bet against companies to bet against this situation, and all that has to unwind. But again, there's also real fundamentals starting to come, together for the company. And then finally, just what we saw at ReRobot is the setup for the future of the company, and everybody was impressed by that. So I think when you put all this together, you kind of understand like why we've seen this big move. The stock does do big, very large moves. That's why it's a real hard, difficult stock to just try to guess and just say, well, I'm going to be in it today, I'm going to be out of it tomorrow. It's one of those things. If you're a couple of days in this stock, and you could miss huge gains. So, but yeah, those are the things I think that are the contributing factors.
Two of them, right? One is don't bet against Elon, and two, it's the way Tesla stock seems to move. It's base and then jumps. We'll take a closer look at that. Just to finish off this story about the shorts, Tesla short sellers have lost $75 billion since the company went public in 2010. The vast majority of these losses happening in the last 5 years. In the last 3 weeks, they lost nearly $10 billion. They just don't seem to be learning. So this is what we're talking about, but this concept. Phase 4 run has begun. Do you believe that that's the case? So if you take a look at this chart here of Tesla stock's history, you can see that it kind of it rises, it stays flat, and then big jump. Then it stays flat for many years, and then big jump. And then for the last 3 years, since 2022, it looks like here that it's been actually falling, but now we're headed up. Is this the breakout for the next jump past this kind of a float? And you've got Cathie Wood. This was several months ago that she said this. Let's watch what she said.
Trading around this trading range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe is going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
Yeah, so you can see that she's, the tagline was Tesla to 4,000. People are absolutely not believing it. They think 350 is massively a huge jump. What's your thinking about what she said?
I actually think that video was the old jump from 2019 to 2022 when it went from the 350 to 4,000, and there is another call for another large jump like that from Cathie and team, and just the charts earlier from Jake. I subscribe to Jake, by the way. I think it's one of the better subscription accounts on X for really looking at trends and TA on stocks. I also subscribe to Jesse, the account we had up there as well, the macro to micro. And those are two great accounts. But yeah, Cathie's been calling this, for some period of time. There's technical analysis, but ARK does really good research on the company, and they've really been able to extract some insights that I've heard a lot of other analysts who've now picked up in terms of the miles and so forth with FSD and the cost structure. Now ARK's been really publishing good information about the cost structure of a Tesla robotaxi, and just the sensor suite alone on some of these other competitive robotaxis cost almost as much as the entire robotaxi. Arguably, again, these numbers move around, but it just shows you kind of in orders of magnitude where the two are. And when you're trying to get this fleet of product out into the marketplace, you really want to focus on lowest cost and deliver max value. I think we'll talk a little bit more about that later on. But ARK's been on top of this, and people see them and they see them trim and so forth. They have portfolio rules about how much they can hold, but in general, they were lumbering into the stock, when it was in the mid, 100s, even low 100s. They were really putting their foot on the accelerator, even oversubscribing to the stock. And sometimes they do have to take some gains as well for portfolio management. But in general, they have the best research on the name, and they were laughing. I remember that CNBC episode. They were laughing at ARK when Tesla was in the $300 range back in 2018, 2019, and the $4,000 call by. They had a $4,000 call by 2022, and Tesla ended up hitting it a year earlier in 2021. So now they're really talking about the next ramp up. That last ramp up was the transition to EV and the value that would be placed on that. And now this next ramp up is honestly the transition of the auto industry to full autonomy and in Tesla's lead there. And that's what this bet on for this next leg up.
Yeah, thanks, Jeff. I did check. You're right. That was 3 years ago. Sorry, that particular comment. Imagine she said that 3 years ago, longer the base. Of course, that's exactly what happened. So the reason why bears, they look at Tesla and they think of it as a car company, and then they don't see the AI or other things that the bulls do. So let's take a look at where the update is. Roland Percher updated his this famous table here of the market cap of Tesla versus car companies, and he said, look what happened to Tesla's chart in just 2 weeks. So this was the big debate that people has had for a long time. They're showing, hey, Tesla was a $1 trillion company. And look at these companies now. They're all these companies, BMW, Honda, add them up together and their market cap is not even near 1 trillion. How could one company be worth all these companies? And now that it's jumped to 1 trillion and even more, if you add it up, you can even add even more, auto companies here as well. Dan Ives does not see it as an auto company. He has just raised his price target to $400 from $300. And what he's been saying this for last week. The Trump White House win will be a game changer for autonomous and AI story. The AI autonomous opportunity is worth $1 trillion alone for Tesla. What's your thinking about those charts and tables that people often like to compare?
Yeah, there's some really good analysts on X that look at the legacy auto companies. I pull up a couple of their earnings, especially the key companies like Toyota, for example. And I do look at their earnings, I look at their balance sheet, I look at their inventory, I look at their sales, and I'm trying to understand, is there real organic growth happening or are there pockets of slowdown? I was able to actually predict when I saw some of the inventory building up over the last year of like, hey, there's, there could be some issues here. And that's what I see happening. And the other thing I see happening, and again, some of this is actually improved. I think in October that we had a pretty good month, but in general, some of these companies are really struggling in terms of driving real organic growth. They were able to keep their prices pretty high coming out of COVID. And, right now, again, the average transaction price for a vehicle, I think is at, $48,000 and it was $38,000 in 2019. And the question you have to ask yourself is what additional value are consumers getting over that 10-year, time period? Are these vehicles, going longer? Are they more efficient on energy? Is there some meaningful jump that's occurring? And so when I look at those charts, and we always try to stack Tesla's market cap compared to the rest of the auto industry, go look at some of their earnings and go look at the contribution of their earnings from selling metal and plastic that's been formed into a vehicle versus the percent of their earning that comes in from unique things that company can do that others that can't. So if you go break down and you look at the Tesla earnings, you see the contribution from software and services growing. You see the contribution from energy growing. You even see the contribution from ZEV credits also growing, although it did decline meaningfully from the last quarter to this quarter. But for the year versus the prior year, ZEV credits are up. And those three things I mentioned, software as a services, energy, and ZEV credits, analysts continue to pull these things out of earnings. They continue to want to put things to the side, and that's been the mistake. And that's why a lot of them are chasing on their price targets for the company and honestly giving really bad direction to their constituents out there. And those, the real tell for me is when I go look at a Toyota balance sheet, I go look at some of these other companies, and some of these companies have really good balance sheets. But you look at the contribution and where the earnings are coming from, it's stale. It's the same stuff over and over They're not adding new sources of revenue. They're not adding new growing sources of revenue. ICE vehicle sales are on the decline. Total vehicle sales are on the decline. We peaked in the US in auto industry sales in 2017, 2018, I believe at 21 million units. And now we're closer to 16 million units. So what Tesla is doing is they're saying, all right, my earnings aren't going to just come from vehicles, even though the EV segment inside of that last, call it, 7-8 year time frame have grown immensely. Tesla's percentage of earnings are growing from things that others can't do. Software as a services, the ZEV credits, really quick on the ZEV credits. People think like, oh, Tesla's getting credits. This isn't fair. Like, it is fair. They've figured out from a unit economics perspective how to design a product that people assign a very high value per dollar on that they'll go and buy. And Tesla makes good margins on it. They've cracked that code on EV. They have the EV capacity. They have the EV volume leverage in the industry. Again, a very small number of models, very large volume. Others don't have that. So they've created a competitive advantage. It's not just a handout. It's these other auto companies have to pay Tesla back these credits because they can't produce enough EVs profitably. And so when you look at those three areas, my final summary is that Tesla's sources of revenue and earnings are diversifying and growing at a very rapid pace, and the others are stale and somewhat consolidating. And that's why I think it's a big thing that analysts have missed, and they're trying to peg this as an auto company. It simply isn't.
Yeah, it's like the early days of Amazon. Amazon's a bookseller. Let's just let's just look at the book earnings. Ignore the electronics or the clothing for now, because they're just a bookseller. We need to compare them to Barnes and Noble, so that's what we need to do. Or the Apple conversion from a hardware to a software as a subscription service. Ignore until, of course, that is what they are today. Here's Jensen Huang of NVIDIA saying all these things about Tesla and talking about the future is AI factories, of which Tesla is building one. And again, that's okay. Let's compare them as auto companies against other auto companies who don't have these AI factories. Here's Jensen Huang, NVIDIA. He was interviewed, and he predicts that AI factories will replace data centers. There'll be a new transition beyond data centers in the future. These factories generate tokens that simulate intelligence, producing valuable outputs like robotic motions and chemical sequences.
Data centers are multi-tenant, stores of files. These new data centers we're creating are not data centers. They're not multi-tenant. They tend to be single tenant. They're not storing any of our files. They're producing something. They're producing tokens. And these tokens are reconstituted into what appears to be intelligence. Isn't that right? Mm-hmm. And intelligence of all different kinds. It could be articulation of robotic motion. It could be sequences of amino acids. It could be, chemical chains. It could be all kinds of interesting things, right? So what are we really doing? We've created a new instrument, a new machinery that in a lot of ways is the noun of the adjective generative AI. Instead of generative AI, it's an AI factory. It's a factory that generates AI. And we're doing that at extremely large scale. And what people are starting to realize is, maybe this is a new industry. It generates tokens, it generates numbers, but these numbers constitute in a way that is fairly valuable.
Yeah, it generates autonomous driving. It generates robot intelligence. And this is an AI factory, not just data centers. And again, who's valuing that? And it's a spend and expense as opposed to realizing this is the future.
Yeah, and all those tenets apply from what we used to talk about with Tesla's auto factories. If you remember some of the metrics I would talk about total process time. I would talk about the output per square meter of a factory, and these being very important metrics. And if you look at these data centers, and obviously processing speed is very important, but also the time to bring up is very important. You've seen Elon personally focus on that, and ushering in all these various parallel efforts from whether it's physical construction, the permitting, everything that's involved with all the various partners, whether it's Dell or Oracle or whomever in terms of constructing these data centers, and then his own team in terms of bring up and getting these things up so that they're out in their training. And again, you just sound out the words: artificial intelligence factory, and you hear what Jensen was saying. Instead of the output being a physical product like a vehicle, the output is going to be intelligence. So Elon has cracked the code in terms of like, how do you get this from a time to value perspective? You have a lot of this is supply chain again, but it comes back to what's the network latency of this whole thing? How long does it take from TSMC producing these GPUs and these portions of a system, getting them into Tesla's inventory or XAI's inventory, and then XAI converting those and building a factory and bringing the factory up online? If you're NVIDIA, Tesla and XAI are the partners you want to actually rocket to the top of your allocation list. Remember, NVIDIA is producing Blackwell right now, and there are way more orders for Blackwell than they have supply for. They're still ramping up at TSMC, and they'll probably be that way for the next 12 to 18 months, if not longer. And when you're building a product and there's way more demand than supply, and I've been in this situation before, you've got to allocate to various partners. We're in the smartphone industry, we were allocating to the various carriers. And obviously there's all these different factors you're thinking about. You're thinking of, number one, what are they paying you per unit? Number two, you think about their ability to move inventory. That's the key thing. And that's also a transparent thing. Like when we were shipping phones to various countries or various carrier partners, we would also have that transparency of understanding what they had in inventory. And the ones that were moving the inventory and that turn rate was much faster. So that was a factor. Not only how much would they pay us for the product, but also how quickly were they turning their products. The faster they turned it, the quicker they were going to reorder. So this whole thing has to work together. This is what network latency is about. This is what network optimization is about. I think XAI, Tesla, under Elon's leadership, they figured out, get these factories up very quick, have them be very capable, and have them processing very quickly. It is a game changer in AI. So he's going to get more allocation, I think, than others. This is what I see happening. He's got the right personal relationship with Jensen, and I think his companies are going to be in very good shape. The other thing that is really important, and you think about the cyclicality of the semiconductor industry, you get hurt on the cyclicality piece when you have long latency in your decision making. You have a long supply chain. You have these long spans of not having all the full information together. But when you're very quick to bring the product in, build the factory up, you're very quick to bring it up online, you've got a very high functioning AI factory, you're also going to be able to know very quickly when to put the brakes on things and not bring in a lot more than inventory. And that's the key thing in all of this as well, because you can really be buried as a company if you brought in way too much of this. So I know I went to a number of different places on that, but I think it was really important to kind of talk through, I think, how Tesla in this situation has an advantage working with NVIDIA.
I love that you did that, actually, because I always keep getting reminded, and you help me do that, which is that Elon says that Tesla's really, it's the factory that is the product, and how fast, right? Speed is important, not just innovation, speed of building is critical. And now factory is the product, AI factory. So the next segment here is we're going to talk about a number of catalysts or milestones. And this just shows you that, before we're even waiting for Tesla as an AI company, there's a lot of things that are happening that we're expecting to happen in the next 6 months, a year. And so let's go through that list. These are lists of milestones, by the way. They're not all catalysts. Only some of them will be catalysts for the stock. And some of them might actually become the ChatGPT moment for the stock. But I consider these more as milestones, things that are about to happen. So here's AJ. He says, a combination of these reasons will drive Tesla's share price significantly above the prior all-time high of $410 per share in the near future. Yeah. 414. So first, there's the refresh Model Y that's coming out in the first half of 2025. second Megapack factories in Shanghai from first quarter 2025. There's actually rumors that it could actually get done by the end of this month. So it's probably the earlier part of January versus, let's say, April. Cybertruck is continued ramp, lower price trim, international deliveries are happening. You got the next gen vehicles from the first half of 2025. Clearly, these are the ones that could actually be a big catalyst for the stock. Those who think of Tesla still as a car company, they're looking for additional TAM markets to sell. The Robotaxi from 2026 and Cybercab for purchase in 2026. Tesla owner ride-hailing launch California and Texas in 2025. These are the Robotaxi. Large-scale application of in-house 4680 cells from 2025. Semi-factory completion in first quarter 2026. Let me pause there. This is the first 8. Anything here that stand out to you?
I mean, these catalysts, if you were to like overlay these on a company like a Ford or GM, it would completely transform the company in a heartbeat, or Rivian or whomever. So it just gives you an idea of the scope and capability of Tesla, and all these things are really about accelerating earnings and revenue on the product. And I really think there's going to be a fairly significant ramp up when these are in line and start clicking. And so anyway, I think it's a good list. I know the list goes on. AJ's very thorough. It's another person I subscribe to. By the way, I think 4 or 5 people we've shown so far. I've subscribed to all of them. I recommend it, and we'll continue to go through this list. It's very thorough.
Yeah, let's go through it. So you got the semi-factory completion in the first quarter 2026. You might have additional factories likely within first half of 2025. The lithium refining plant goes online. Tesla Robovan, he's saying 2026. Optimus deployments end of 2025. First customer trial. You got the global fleet vehicle exceeds 10 million by the first half of 2026. That's going to be an unassailable lead in AI training data. Strong relationship between Elon and Jensen, which we just showed here. Elon was Jensen's first NVIDIA AI customer. Likely advantageous access to NVIDIA data center products. Tesla's AI training computer Dojo Gen 2 in 2025, followed by Dojo Gen 3. Wider adoption of Tesla owners contributing vehicles to the ride-hailing network. Robotaxi fleet exponential growth from second half 2026. Tesla to create virtual inference cluster with idle Tesla vehicles, onboarding inference computer. Friendly U.S. administration helps Tesla to achieve more meaningful U.S. government vehicle penetration, currently dominated by GM and Ford. Wireless charging likely to drive larger EV adoption and accelerate renewal cycle. I don't know. SpaceX Aura. Soft benefits with POTUS. Mm-hmm.
Oh, I mean, you could put that near the top. I mean, not only is it soft benefits, but it's also just not being chased around and trying to be deported or thrown in jail. So yeah, no, it's a very thorough list of things. I want to call it just one key point, and that was this move to 10 million vehicles on the road. Mm-hmm. These 10 million vehicles on the road over the next, probably, more than a year, just over a year from now, maybe, they all have Tesla inference chips. So Tesla's going to be at 10 million units. There's not 10 million of anything right now doing the level of inference instruction. So, information in, instruction, or control out. There's nothing like this out there. And Tesla's already got 7 million of them in a year from now, which I think is accurate, or just a little bit more. They'll have 10 million of these things. And what have we talked about? Training and inference. Well, over this period of time, look how smart Tesla full self-driving is. I think we may look at some stuff later about 12.5, 6, and that whole series that's out there right now. And just think where that will be a couple of months from now, or a couple of years, or a year from now, excuse me. But the key thing is, remember, just think of like coding and the app, in the app universe out there. From an investment perspective, or from like where the value is, the value today isn't in all the C++ and Python, all the various compilers for that software, which is, think about like where the training occurs and where this code is actually being built. The value is in the actual applications. Think of Uber, think of all these various things that wouldn't even have existed, in the scale it does today without the ability to have applications running on a smart device. So think of just this work is going to be moving just like, from coding and compiling to the actual apps. Think of this work in self-driving and in humanoid robots going from all this training and all this investment in NVIDIA and in training and in Tesla's work on Dojo. But what Tesla did in advance of all this is get the inference out. It's the best inference you can get per token and the best value per dollar that Tesla says they can still buy today. It's already ramped. It's already out there in mass. And all this workload is going to be moving to the inference side because the training is going to be so good. You're going to have more and more vehicles just do nothing but do the inference work and control vehicles. So the point is like Tesla's already ahead on this ramp. Everybody right now is looking at training, looking at the AI factories, looking at the data center, looking at this magnificent runway for NVIDIA, which they truly have. But I don't think a lot of people are looking at is the inference ramp, which is the other side of this, which is kind of the customer for all this that Tesla's already gone through, and they will continue to expand and proliferate. And there's another inference chip in the works right now, AI5, that's not only going to be so much capable on the inference side for the vehicle, but they're actually going to be using it and some AI4 as well in the training jobs as well. So I think that's really probably one of the most important call outs for Tesla over the next year or two.
Even Jensen Huang has been saying that inference side of the compute is going to be 1 billion times larger than what it is today. Tesla's one of the leaders in this space. All the cars have inference chips. All the bots will have them. And yet again, well, it's not impacting.
Everybody else has to start a ramp, Herbert. Everybody else has to start a ramp. Tesla's ramp started years ago.
Years ago, yeah. It's going to show up soon. Thank you so much, Jeff. This is great. I love it when you combine your knowledge about, factories, vehicles, and products, and of course, supply chain and manufacturing, and you bring it to the stock. That's our favorite topic. Thank you. Follow Jeff on his X account, the Jeff Lutz. Subscribe to him on his account, and sign up for his. If you're thinking of buying a Tesla vehicle, use his link. I'll try to add that onto the description here. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.